The circular economy looks at the inputs going in, the product is being used, and then the inputs come out and go back in to feed a system. The apparel industry mass produces a tremendous amount of stuff, and a large percentage of that goes into waste immediately. It's just never sold. If you're looking at it from a business perspective and an environmental perspective, here's an opportunity to address both with a great impact. What I wanted to do was help enable systemic change in the apparel and textile industry, which was a $3 trillion industry. So it's massive. There are a lot of flashy, kind of niche, sustainable opportunities in the apparel industry. Fashion is flashy. And we say no to a lot of it because
over 83% of you that listen to or watch this show regularly haven't yet subscribed to this show. So could I ask you for a favor before we start today? If you like the show and if you like what we do here and you want to support us, the free and simple way that you can do just that is by hitting the subscribe button or following us on your podcast app. It helps this channel more than you know. Thank you and enjoy this episode. Thanks for coming on the show today.
Thank you for having me.
You founded Alante Capital in the beginning of 2016. What inspired you to launch your own company? And especially what I think is very interesting that I want to talk to you about is what led you to choose circularity and focused on the apparel industry?
Well, I always had this entrepreneurial side of me in everything. And so I kind of assumed I would be an entrepreneur at some point, but wasn't really pushing it, knew it would be a hard road. So I was kind of waiting till it was the right idea, the right thing. And other entrepreneurs will say this as well, but it was one of those experiences where I'm seeing this and I'm just like, how does this not exist? Like, how is this not already a thing? And it just seemed like such a big opportunity that I couldn't walk away from it. And so I spent a year looking into it. The reason why it ended up being a circular thesis is really what I wanted to do was create systemic change, help enable systemic change in the apparel and textile industry, which was a $3 trillion industry. So it's massive. And for me as an outsider, I wanted to focus on a single industry so I could really understand, gain the intel, the partnerships, the expertise required to pick the right companies and scale them. And before I was in food systems and there were lots of food system funds out there. And so I hadn't seen any in the apparel space. It just seemed like this opportunity, a huge overlooked industry. And as I started to spend a year looking at pipeline, there were a lot of exciting companies in this space.
Why the name Alante?
Yeah, so I was living in Barrio Escalante, which was a neighborhood in Costa Rica, and I had a different name. So when I first started the company, I started it with an investor friend from the co-working space in San Francisco. And we had called it Vitrum Ventures. And I come up with that name because I was watching some PBS Nova episode on the formation of glass and transparency and how this whole concept behind it. And we were working together for about 8 months. And then it was clear that we didn't need to go work on this together. Like we had kind of two different visions, two different ideas. So we made the hard choice to split directions. And I was going to go forward with this idea, which was the Alante. And so I gave him the name and I wanted a fresh start. And so I had a handful of names and Alante was one of them. And Escalante, Barrio Escalante, it also means to scale up. And Alante is slang for to move forward, Adelante, Alante. And it was time to move forward and it was time to scale up and do this. And so that's where Alante came from.
Spanish is one of my 3 languages, and I've spent a lot of my life in Mexico. And I didn't recognize that Alante was forward. I guess in Mexican Spanish, I would have said adelante.
Adelante.
Give me a high-level introduction, an overview of Alante Capital. What's your mission, the main activities, key strategies, and just put some bookends around it, like the number of employees and funds and structure, that type of housekeeping stuff, and then we'll drill down in much more detail.
So Alante Capital is an early stage VC fund. We invest pre-seed, seed, and Series A into startups that enable a circular and decarbonized future for design-driven consumer industries. We started with the apparel industry, Fund 1. We launched that in 2019. And we are now launching our second fund called Alante Capital Investment Fund 2. And that's going beyond apparel and looking at home goods, footwear, and the outdoor gear space, all similar supply chains, similar retail partners. We are a team, small but mighty team of 3.5. There's 4 of us, 3 that are full-time. So it's myself, my co-founder, Leslie Harwell, who's on the East Coast, and our principal, Tess Krasny, who is up in the Bay Area. And we have Lisa Bougie, who's our venture partner, who came from a long career in the apparel industry. So the 4 of us run Alante Capital. We also have a group of pretty active advisors that come with technical expertise within the industry that we operate.
So it's a distributed organization.
Mm-hmm.
Right.
Yes. We've always been remote.
So 2 funds. Are your funds open-ended?
No, closed-ended. So they're 10-year funds plus 2 one-year extensions, typical 2 and 20 model. And the first fund, we had our first close at the very end of 2019. Eileen Fisher, who is a sustainable fashion pioneer, she teamed up with us to launch Alante. So she's a general partner in Fund 1. And then Fund 2, we're in the early stages. We've made 3 investments, making another one tomorrow as all things go well at the investment committee. And we'll be, that's open for the next year, and we'll be deploying that for the next 4 years. And the plan is to have more funds after this. There's certainly more demand for our capital in this space than the capital we have available. So it's an exciting time to be right here.
Your AUM of Fund 1, do you disclose that or?
Sure. So our first fund was really a proof of concept fund. Leslie and I are emerging managers. So we did not come from a long history in venture capital. She worked in social finance at JP Morgan and was an investment banker before that at Credit Suisse. And so for us, our first fund was a small $10 million fund, just over 10. We deployed that to 12 companies that fit within our strategy and thesis. Luckily, they're all doing well, which is great. They're all still operating here, and we're in year 4 now with a lot of markups. So the performance is been good, partially because it's been a very hard time out in the macroeconomic climate, and we invest to enable resilience. Their purpose was made clear pretty quickly here with the pandemic and then, economy as it is. And then for Fund 2, we are planning to raise $35 million and invest in about 22 companies. Same type of a strategy, pre-seed and seed with a few Series A on the material science side.
Who are your investors and why are they investing with Alante? Is it passion about what you're doing, or is it returns, or does it not matter?
It definitely does matter. It's both. And yeah, all of our investors are expecting venture-like returns. So we don't have, and in the beginning, that was kind of purposeful. We were really wanting to make sure that was proven out. In 2019, climate tech was still not a phrase people used. And so we were having to spend a lot of time trying to explain how we could be investing for sustainability and still make venture style returns, that this market opportunity was that big. Now we don't have to spend time explaining that. People really understand it. So our LPs we have a lot of family offices, high net worth individuals. Most emerging managers are too small to have much institutional capital. So we have to mainly raise from individuals. We do have 3 institutions in Fund 1, Fund 2, and we have a couple of apparel companies and a supplier. So I love having more manufacturers and suppliers in this industry as LPs and have their voice around the table. They are the ones that are really benefiting from these technology solutions.
Explain what the circular economy is and how it differs from the linear economy, and then what does circularity mean specifically in your focus, which is the apparel space.
So the circular economy, as opposed to a linear economy, which is what we have now. The linear economy is like a take, make, waste is what people say. So essentially there's inputs in, there's the product use phase, and then it becomes waste. The circular economy looks at the inputs going in, the product is being used, and then the inputs come out and go back in to feed a system. So it could be that they biodegrade or compost and they go back into our soil. It can be that they're recycled and go back into a feedstock, whether the same type of product or a feedstock for a different type of product. That is more of a circular strategy. And so for us, when we looked at the value chain of the apparel industry and where opportunities were, there were a ton of opportunities in the supply chain. How you make stuff, like the material innovation, like if, to make your shirt, there's the fiber that goes into it, there's the dye, there's probably some finishing chemistries to keep it from wrinkling in your suitcase, to keep the dye from, staining quickly. There's all of these different steps to go in to make your shirt. It's a big, opaque supply chain. So all of those areas had opportunity for an innovation, and I was seeing technologies out there that were addressing those spaces. There was also, though, more opportunity in looking at inefficiencies in how and why product was made, how much. The apparel industry mass produces a tremendous amount of stuff, and a large percentage of that goes into waste immediately. It's just never sold. And that was a big waste stream. I mean, if you're looking at it from a business perspective and an environmental perspective, here's an opportunity to address both with a great impact. We also looked at return. So, in the pandemic, all of a sudden, everybody's shopping online. You're not trying on your clothes anymore. So people are bracket shopping, buying 3, 4, 5 things to try them on and keep only 2, return the rest. The problem is that reverse logistics is broken in a lot of brands, and brands, it's more costly for them to bring it back in and sell it again than it is to write it off as waste. And so that became this leakage point where perfectly good product was immediately becoming a waste stream. Not to mention all the packaging waste that was driving me crazy, as every single apartment in my block would be just covered in, cardboard and plastic poly bags. So there was this opportunity here at moment of sale. How do we get people to buy the thing that fits them, buy the thing that they will want and wear and keep? How do we fix that packaging distribution space? And then it's in their closet, and what happens? Do they wear it once or twice? That was a huge issue that's been going on is, this, wear it once, throw it away. That's a very wasteful model. So how do we start to meet consumers where they are with a better opportunity? So can you rent certain aspects of your wardrobe if you want an ever-changing wardrobe? How can we make resale as simple as possible so that instead of throwing it away, having it die in your closet, it's back into the market and being used? So that moment of utility when a project's been created and it's out there, it needs to be used as long as possible for us to really have the better impact of the product life cycle. And then once it is done, how do we think about waste and processing and collection? And can it be the feedstock to the next product? And so that value chain became our pipeline. And our pipeline, we have about, the way our approach goes is that we invest about 50% material science, 50% SaaS and software that B2B that enables a more efficient value chain. And we have hundreds of companies, 1,000 companies or so now that fit within that strategy and that are early stage investment opportunities.
If you'd like to share an insight, a question, or perspective from your corner of the investment world, I'd welcome hearing from you. You can reach me directly at scott@sri360.com. Many of the best conversations on this show begin with listeners like you. So that's really the scope that you're making the argument. There's more opportunity in the apparel space, primarily in the value chain, versus somebody investing in a much broader, more traditional climate-focused VC fund, and that unrealized opportunity still exists?
Oh, yeah, absolutely. For me, when we're thinking about climate, it's a lot more than just pulling carbon out of the atmosphere. It's thinking about where does it go? What does it go into? How do we produce less carbon to begin with? The first investment that we made is in a company called Mango Materials. I'm on the board. We invested alongside Adidas and Patagonia into this company. It was sent to me by our team at Levi's, who was our first corporate partner. So we really integrate with these brands to understand what's valuable and what challenges, we can truly address. This company uses methane gas to make a biopolymer that can be converted into a alternative for polyester fiber. And microfiber pollution is this huge issue that all the brands and humans are now concerned about. And the fiber is released into the environment, will biodegrade and go back into our natural carbon cycle, or it can have a longer shelf life and even be potentially recycled. So this is this carbon negative approach to fiber that is specific with the use case in this industry. And we have a lot of companies in our strategy that have that, but we also think about it more holistically, like inventory management and inventory planning. Make less stuff. If we just make less stuff that doesn't sell, there's a massive carbon savings in that alone. So we took this industry-specific approach. Our industry is broad now. It's massive, still $4 trillion industry. But because we wanted to make sure that we could truly vet these companies, and so to do that, we became specific so we could create these very deep relationships and partnerships with a lot of brands across the space that are non-competitive. And some that do compete. There's Nike and Adidas and Lululemon and, Kering Group, Gucci and Stella McCartney. We work with them all. Eileen Fisher, H&M, and we bring them innovation that they want to work with. And for us, what we're trying to do is make the best investment decision into something truly viable that can compete against price and quality specs. To get that, we need to understand from the brands what the alternative options are. What are the quality specs of a polyester fiber that they would be expecting for mango materials, for example? And then what we get to do as investors is bring these entrepreneurs, even we do this for tons of entrepreneurs that we haven't invested in, when they're exciting and compelling, we can still do it, is bring them to the right team at their customers. So, this is a perfect alternative fiber for Levi's. I know Levi's is looking for this. Let me bring you in. This is the team you need to meet. I help explain this is the stage that they're at. They need R&D funding for a pilot that's going to do this, or they need offtake agreements for whatever. And it just saves so much time. And so that's a value add that we bring our entrepreneurs, is really a vetted customer pipeline to help them scale at variety steps of that process. And the reason we can do that is because we are specific into our industry.
What's Alante's theory of change and the problem or problems that you're specifically trying to solve?
If I had to boil it down to one word, it would be waste. And waste can come in a variety of aspects, whether it's carbon, whether it's material. That sustainability aspect is huge. And so we're trying to enable a circular and decarbonized future for the apparel industry. And what does that really mean is we want to make it so that they're more nimble, more resilient, and less dependent on the fibers that they've been relying on. If we're getting virgin polyester or conventionally grown cotton, which is super water intensive and chemical intensive, like what other opportunities are there to use a recycled fiber that can be as competitive as a virgin fiber? We just invested in a company that's super cool that uses the waste from potato fields that needs to go somewhere. And they've been able to figure out how to make it as a really, truly viable cotton alternative, meeting specs. And that's the first time we've seen something like that in 7 years. So we look at how do we create these opportunities for a nimble and more circular and sustainable value chain for this industry? How do we create a more healthy consumer who interacts with these products as well? So for us, it's really creating systemic change. We want to unlock systemic change within this industry. And I don't think it needs to stop at apparel. I think if you take this approach to any industry, you can do it.
One thing that I think is really different about Alante is that you don't just focus on one area across the supply chain of apparel, but instead you focus on the end-to-end circle. So how did you end up with the end-to-end circle? And then make that real to me. How do you actually do that?
I'm not a brand person. I am a supply chain person. So very early on, we had to make a choice. Are we investing in sustainable fashion brands, sustainable retail marketplaces, or are we investing in material science, software, supply chain? And very quickly, I knew I didn't want to be a brand investor. And we still looked at a lot because we didn't want to miss the opportunity if we had the chance, but ultimately felt like venture wasn't the right type of capital for that side of the pipeline. And so we became this supply chain focused investor. And when I was just spending that year, when I lived in Costa Rica, talking to everyone I could about the problems in the apparel industry, reading everything, I was seeing the connectivity for what are the brand's problems? What are the consumers' problems? And I was tracking all of these startups, and I just had this massive spreadsheet, and I started to tag it in a ways that I could understand that weren't the correct ways that the apparel industry necessarily tracks it, but something that made sense to me. When I started seeing production, distribution, use, waste recovery, these little buckets. And I had them in these columns, and these it was starting to become clear. And I honestly had been just living in my Excel spreadsheet forever. And I went to sleep one night and I just had this whole dream about solving this thought in my head of how it all connected for real. So it was a dream. And I woke up and was that's what it is. It's the circular economy of this and this and this. And it was how did that not already come together? But it was I was too deep in it. So after I stepped away from it and, slept, I saw this whole strategy that is still the strategy we have today in Costa Rica, 7 years ago, whenever that was. And that's how we launched this kind of concept around that.
You've identified 3 dimensions of impact that you're specifically targeting. The first is the environment, and then the second is labor, and then finally consumer consciousness. Explain a bit more what each of these mean to Alante, and then why or how did you decide to focus specifically on these 3 dimensions?
So these are just our dimensions of impact. Beneath them, we have KPIs on like how we track the different types of indicators. But when I started, like I cared about the environment. I was working in food systems, but it was really more the intersection with humanity that I had grown up caring deeply about. It was the farmer and, the smallholder farmer's access to being paid for what they're producing in a more fair way. Like that was the thing that really got me. So I wanted to be building this to have a social and environmental approach. Since running this company for this many years, unfortunately, the social side is much harder to invest in. So we look for technologies that can enable more social impact. We haven't invested in a ton that are pure play on the social. There's a lot of companies that do result in creating social impact by removing harsh toxins, by creating a clean environment for them to work in. We're doing a company now, I can't talk too much about it yet, but that is the most socially responsible one we've done yet. But that labor piece was important to me. That was kind of where I came from. I learned more about the environmental piece along the way. And the environmental piece is huge. I mean, that is all of our companies address the environmental piece in some capacity. And then the consumer consciousness dimension is really how do you continue to build a movement around circular economy or sustainability? And now, I mean, that was happening without us early days. And now you see it and it's so mainstreamed and it's exciting. There's like everybody knows about sustainable apparel now in a way that nobody did 4 or 5 years ago. It's just in every mall. It's on commercials. We track kind of the role the different technologies we play have in enabling that kind of continuation of this consumer consciousness shift. But underneath that, as an impact expert, like that's where I came from as a development economist, it's important to me that we track few but good indicators. We do not ask our companies to do everything and report on everything. I want very clear and concise indicators that go along with what their business intention is and that can be tracked and measured consistently over time. So usually that is directly tied to sales. And when we're investing for impact, the impact these companies have is deeply integrated into what their product is. It's not like a take one, give one type of model. It's like, no, the more product you sell with biodegradable polyester fiber for methane gas, the more carbon savings there is, or greenhouse gas equivalent emission savings there is. And so that's how we do it. Those dimensions are the higher level portfolio strategy. And then underneath them is our KPIs.
What are the KPIs and metrics that you lean on? And I don't know if you use the same set with all or if it depends on the type of tech or investment you're doing.
Definitely depends on the type of technology investment. I think it would be a disservice. And this is like a debated topic within the impact investing world because a lot of people want consistent, same indicators so we can like measure these companies against each other. But for me, it's more about like, what is the mission of that company? Like, what are they trying to do and figuring out a realistic indicator underneath that. I like it to be more nuanced like that. So they aren't all the same, but we do have a lot of GHG emissions, companies that are addressing GHG emissions. Most of them are. One area within the circular economy space is like this enablement of that closed loop part, the circular materials piece, like keeping things in circulation. That was this like growing space. It's still very much new and growing, where we had to look at a lot of different experts out there who were looking at how do we say what the carbon savings is of a shirt that's not going to be bought, right? Or like, that shirt has now got another owner. You kept it in circulation longer. So what is your carbon savings with that? So we use some of like the expertise that's out there and the reporting around kind of what the equivalent carbon savings or resource savings is for displacement or thinking about the circular economy parts of our metric. And we're very transparent. So you can actually ask for our impact report on our website and we'll send it to you. And we have a very long section around methodology and how and why we get to each of these metrics.
So let's talk now about Alante's investment process. Can you walk me through the end-to-end investment process that you go through when Alante is selecting an investment? How do you source your targets? And then what's the screening process, both financial, non-financial, as you go bring it through the filter or however you envision it?
So the pipeline, it starts with pipeline, and that's, as emerging managers in this space, that was critical to us. We had to have a strong and solid pipeline so we could have good deals to invest in. And so by being the sustainable apparel industry fund, we became a magnet. And that was very on purpose and important to us. So we partnered up with the accelerator programs. We brought on Eileen Fisher, who helped, and she put her name on this, which enabled us to get all of these brand relationships. They started sending us deal flow. We started to get our name out there. We get a lot of inbound applications for funding from very relevant companies through our website alone. And we've made it by now, we're pretty well known. In the early days, it was becoming that magnet was very important. And we had this lucky opportunity where one of our startups that we were talking to was doing an article for Vogue Business. And she said, "Hey, will you speak to the journalist for me?" And I was like, "Yeah, okay, I guess. What does she want to talk to me about?" And I talked to her, and we had a unique perspective in the world of sustainable innovation serving this industry that she was writing about. So we became his go-to source for her. And we didn't pay for anything, pay promotional, or PR outreach. It was all earned. And we had 2 or 3 different journals, Sourcing Journal, Women's Wear Daily, Vogue Business, where they were reaching out and we were getting quoted often, monthly. And that really helped in the early days because innovators in this space, this movement was growing all of a sudden, and it was all of a sudden growing quickly. And so they were all paying attention and reading these articles about startups partnering with certain brands. And we were always there. And so that helped. Every time there'd be an article, there'd be a lot more people reaching out. And then, of course, co-investors. As we started to make investments, which I'll get back to the investment process in a moment, but our nuanced due diligence strategy, like being able to talk to Adidas and Levi's about the innovation that they're looking to work with while we're doing that, was valuable to other investors. And so co-investors wanted us on the cap table. And so they were like, oh, this is they were more like climate generalist funds or sustainability funds. But when there would be something intersecting the apparel industry, they would always send it to us and be like, hey, you guys want to check this out? What do you think? Do you want to come on in? And so because of my co-founders' relationships with more seasoned VCs, we knew all these people, and they became really great active sources of pipeline for us. And then our entrepreneurs ended up loving working with us and starting to send people our way too, which I'm really honored when our portfolio founders send us a great other portfolio founder. We've made some investments that way. We talk to hundreds and hundreds of people every year. Our principal has our intro calls now. It used to be me and Leslie doing that always, but now Tess will have our 30-minute intro call with that relevantly fits in our thesis and is somewhat interesting. And then if it is, we have a weekly digest call, weekly pipeline call with the team where Tess can reports out, this is what she met with this week. This was interesting. This wasn't. These are questions. So we're staying in the loop. If there's an area where I'm wanting to be smarter at understanding, it's starting to emerge and I need to be on top of it, then I join all those calls with her, and Leslie will do the same. So sometimes we jump in if it's an emerging space. But then if it's oh, this is cool and interesting, we've looked at the deck, then we have our call with the partners. And so the entrepreneur will have a call with usually one partner and Tess again, and we'll dive in. They'll do another pitch for about an hour or so. We have a deep conversation, and then we start it goes a little bit further into our process. Once we decide we actually are interested in investing, early on, we like to get both partners engaged. So we'll have the other partner because we're the investment committee, along with one outside person. So, both partners have to have a level of buy-in. And then the one who leads the deal works with our principal to actually bring it through all the way till the end and then present it to the other partner and the external IC member. So that process can take, once we've decided we like this, we're really interested, let's go ahead and move forward with due diligence. That can take anywhere from 6 weeks to 2 or 3 months because of usually the lead investor. And so if we're not leading, which we haven't led yet, but with Fund 2, we'll likely be leading a handful of companies. But we were just too small to write big enough checks. So we would be, it's that timing of we're going to go deep. We go deep on our due diligence. We really understand the company, where they're at, their process, there's all of that, because we are very actively engaged in supporting them post-investment. So that due diligence part is critical for us. And we have a whole process in how we kind of turn that around and
What about your screens, financial screens, but then you have non-financial screens? Can you just speak to those a bit, or that process?
So for us, the team matters a lot in these early stages. I mean, every investor says that, but it's true. The pre-seed stage, seed stage, like the team really matters. They don't have to have everybody hired, but, understanding kind of the founders. But our screen around that, I think, is far more inclusive. So we're not looking for people with specific background. We're looking for people who think in different and specific ways, who understand the problems that they're facing, who have the softer skills that we're looking for, not just that they came from this VC fund or this Ivy League university or this think tank or whatnot. That's not really what we're looking for. We're looking for people who can open up and be partners and be vulnerable, talk about the challenges and the opportunities, who I can trust and be able to say, yeah, we can get into this. You don't have to be perfect. There's this dynamic of entrepreneurs having to pitch investors and be perfect to be able to win capital. And that is the opposite of what works for me. So, just in me and my nature, I like to get real and get down into it. And that partnership matters. And so, there's a lot that goes into understanding the team. How do they think? How would we work together? All of that. The product obviously is critical. So there are a lot of flashy, kind of niche, sustainable opportunities in the apparel industry. It's apparel. So fashion is flashy. And we say no to a lot of it because viable, it's never going to be able to meet cost competitive. The material or the output is not durable or does not meet quality specs. And brands aren't really willing to go beyond a pilot with that. They might say, yeah, look at this really cool alternative leather made out of XYZ that is, in this collection, and they get the buzz and the marketing from that, but it's not going to go in and actually start to displace unless it can meet quality specs of the alternative leather that it's trying to address. And pricing matters a lot and matters more than one would hope for innovation in the early days, but it really is critical in this industry. So that part we can't shy away from. So we dive deep in that, and the market has to be enormous. So when we're investing, it's in these markets, polyesters, PET, a huge market, and we're looking at replacing the polymer. So it can go into plastics. And so we're looking at a lot of different markets that these kind of applications can go into with a better feedstock, with the ability to scale. On the material science side, that matters a lot, is thinking about commercialization, cost of commercialization, and plans for scale. We take a balanced approach where we have about 50% material science and 50% software so that we can reach the type of return expectations within the time frame of our fund that we're working towards as a VC, knowing that sometimes material science returns will be great, will be very high, but it's going to take a lot longer to get there versus something on the software side. Yeah, we really look at all of that. On the impact side, it comes down to, is it embedded impact for systemic change? And I just lived and breathed this so long that that's the easiest thing for us to know quickly, oh yeah, no, this is only something that increases sales, pass. And be oh yeah, okay, the impact is there. It's that part is not challenging because it's embedded impact. So we're not looking at something that if the CEO was changed, the impact could potentially go away. No, this is just a critical new innovation on a polymer level or on a chemistry level, so the impact is embedded. So that's something that comes up early, probably the first call. We would maybe even not even have the call. If it seemed really compelling and we weren't sure about the impact, we'd have the call, because sometimes in an area I care a lot about right now, we see impact where even the entrepreneur doing the company doesn't necessarily see impact. And that has to do with inventory planning and inventory management, and how brands are making choices about how many products and what color and what type and what style and in what location. And where we see this as this huge unlock for sustainability, a lot of the entrepreneurs out there and some of the brand teams, they just think about it as a business tool, a critical business tool for a massive industry.
How do you balance return and impact when you're selecting your investment and making investment decisions? Is it iterative? First it has to pass traditional financial analysis and then let's look at the impact, or is it impact first and then let's see, can we make money at it?
No, it does not. It's definitely finance first, but impact is also. So finance first, it has to be just a solid, good business, because it comes back to the why I'm even doing this, which is for systemic change. And so to reach systemic change, the reason why I like venture capital at all is you have to have something that can be so competitive that it outcompetes whatever inherent practice or product is out there that it's going to compete against. So polyester, plastics, like these types of chemicals and chemistries that we're looking at are massively scaled, hugely pervasive. They're in every industry. They're built for efficiency. They're super cheap. So how do we look at something that can start to replace that? I don't want to just create something small, niche, and be like, oh, here's our little cute green side of the business. Like, what can we actually look at that is a radical displacement of some of these inherent technologies? And so for us, that scale piece, which then results in scale style returns, is number one important. Like, we have to find things that are just solid, strong businesses, because if not, I mean, this is a very competitive industry, venture, but not venture, but the apparel industry is so competitive that it just won't go very far. It'll just stay small and niche, and that's not what we want. So it really comes first from that financial return perspective and the scalability, the competitive advantage, the companies that we're investing in. And then on the impact side, we just wouldn't do it if we wouldn't see something that could also, the result of its scale is transformative impact. And we have different definitions underneath what that really looks like and means. But we don't invest in anything that doesn't have the possibility of like removing a gigaton of carbon. Like, we don't have any type of claim like that, which a lot of, climate funds have, because we're looking at it from this more systemic approach.
How are your investments typically structured?
Yeah, so oftentimes they're pretty early stage. So it'll be a safe, usually at the pre-seed stage. Sometimes a convertible note, though less of those these days. And the safe is a sale of future equity, so it ends up just being part of our equity portfolio. And then it's just preferred equity, usually in the priced rounds of seed and Series A companies. And we'll follow on for a few rounds. So we reserve about 50% of our capital for follow-ons, and we expect to follow on at least pro rata what most of our portfolio companies, though, at every time they are raising, we have an internal review to decide if we are going to continue investing.
Regarding your average ticket size, I quickly did the math in my head of your first fund and the number of investments, and I presume it's around $1 million per ticket.
Well, actually, because we're reserving for follow-on, for Fund 1, it would be about $500K for the Series A companies. And then we invested more in the following rounds. We would have liked to do $1 million, but we had a very small fund early on. And then in the seed and pre-seed, it's smaller. So it was 350 for a seed, 250 for 200 for a pre-seed company in Fund 1, which was a 10 million fund. For this next fund, the ticket sizes are bigger. So the pre-seed is more around 350 to 5, seed will be 5 to 750, and Series A is 1 to 1.25 about.
I think you alluded to your target returns are what you would describe as standard VC.
Yeah, absolutely. So that's what we model everything to, is return projections that can be market rate and within the time frame of our fund. So if we're looking at something that's really compelling, but we only really think we can get like not a whole lot of return, or it's going to take 12 years to get there, we can't do it. So that has really come into the due diligence phase, and then also tracked throughout every quarter. And so we look at, we're targeting kind of high 20s, low 30s IRR for Fund 2. And Fund 1 right now is performing quite well, though it's still very early days for a lot of those companies, because we invested initially in 2022 in a bunch of them, some in 2019, and then 2021 in a bunch of them. I think it's doing well, and they're all continuing to raise. So I think we're going to have we don't have any exits yet, but we don't have any failures yet. And so I think the next year or two, we'll start to see some more of those realized exits out of Fund 1.
In your particular investment space, is there any particular standout criteria that you look for that would be different than from a typical VC things of looking for a strong team and things like that?
Yeah, for sure. Especially on like the material science side, because that is where we have a lot of expertise, is really thinking about what can scale and outperform in this space. We see a lot of companies in this area. What we're looking for is companies that can drop into traditional manufacturing. There's this kind of push for like the future of manufacturing, where you like invest in things that are fully outside of the supply chain. That's not really where we operate. We're looking at drop-in replacements that can just drop into the traditional supply chain, the metal in the ground, because that's what creates this ease of adoption. And that matters a lot for the apparel companies, is this level of ease of adoption, whether it's on the software side or the material science side. And because we have a nuanced understanding of how they make decisions and how them and suppliers are adopting technologies, we have some criteria around that we look for. And that's how we de-risk the time frame of this kind of company. So it's making sure that they can scale within the time frame of our fund is we need to see their ability to be able to drop in and scale and commercialize within 5-6 years. So we have a lot of nuanced understanding about that. I think also on the circular economy side, like we get sent a lot of technologies and people tend to focus in on one area of the innovation, like the feedstock or the process or the product. And we really look at all of it. So if it's like a company that enables recycling of something, like we still have to look at what is the feedstock, what is the market for the feedstock, understanding that everyone kind of looks at that. What is the process? Like when it goes into that black box of what they're doing, like what is the carbon footprint of that process, sort of the chemicals, the heat required, all of that piece. What is the product and how viable is that? And then how does it drop into the supply chain afterwards? And I've just noticed, I thought that was pretty straightforward, but I've just noticed that that is not always how investors or brands are looking at it. They'll look at some and not the other, and then get to a point where that thing that they didn't look at is the thing that breaks the deal. So we look at that screen from the beginning. Like there's our first check boxes when we're looking at a material science company. We've actually built tools for brands to do the same thing. If they're looking at 3 or 4 companies side by side, how do they pick which one is better? Historically, it would be like, well, we met this person at a conference and she was nice. And now it's like, well, okay, cool. But here's the 4 competing companies that are doing the same thing because their job is not innovation and running VC funds. Their job is making clothes and so we were like, okay, here's the tool. And then we were the pipeline. So they talked to us about like, what are the competitors in this space? And then they can decide what's best for them. But anyway, yeah.
Can you give me 1 or 2 examples of investments that Alante has made using this strategy that you've walked me through, just to make a real case study, so to speak?
Yeah, so I already talked about Mango Materials, which is our biodegradable alternative to plastic and polyester made from methane gas. Another cool one that's in the Bay Area is a company called Sway the Ocean. And Sway is a thin film plastic alternative made from seaweed as a feedstock. And they were able to pelletize that so that it can drop into traditional manufacturing for plastic, for thin film blown extruders, and be able to make an alternative to poly bags, which are, there's just so many of those that instantly become waste. Whenever you order something online, it's always in those little thin film plastic bags. This is a replacement for that is home compostable. You could bury it in your garden. And they are also in other industries like the peekaboo sleeves and like a pasta box, food grade, they're FDA approved. Sway is a really cool company. Cirque is a company in our portfolio, is the second investment we made. And they are able to recycle post-consumer garment waste, so old clothes that are mixed with all kinds of crap. And they are able to pull all of that out and make a pure feedstock that can go into becoming the base polymer for a virgin grade polyester fiber. And the cotton becomes man-made cellulosic, which is the third fastest growing fiber class in the apparel industry. So Cirque is that unlock for the circular economy, and they are doing incredibly well. They were up for the Earthshot Prize runners-up last year, been in the market with Zara, Mora Hoffman, a number of other brands. So that one's exciting. And then on the software side, one company that I really like is a company called FitMatch. And fit is a huge problem that creates a lot of waste on both directions. People return the clothes, or they make a lot of product that doesn't fit people in the beginning and it becomes waste. And so they have this 3D imaging technology that you can use with LiDAR on your cell phone or in stores, and you can be matched. It quickly takes the 3D aspect of your body type without capturing images. So there's a lot of data security there, and match it to clothes that will actually fit you. And that match piece is critically important. There's a lot of alternative technologies out there that are not efficiently matching. They can capture your data, but that match is critical. And so they can know what clothes will fit on your body, depending on the fiber, the material, the seam, and all of that. And that one's been really exciting. And they've partnered with Intel, and they're now in the health space as well as in the fashion space. They're in every Savage Fenty store. They're really starting with the hardest to fit categories like intimates. Yeah, so that's FitMatch, which is really cool. And then we have a bunch of companies that are enabling rental and resale, but they do it for B2B. So we're not looking at like the next platform, like the Real, but we're looking at how do you brand quickly unlock resale for your customers. And there's a company called Treat that has done that for the most brand. There's a number of competitors out there, but they have serviced the most brands. And so they quickly create these branded resale sites for all the brands that you love. And then they have the Treat Mall, which you can go on and shop, treat.shop, and go and buy used clothes from a ton of different brands. They make it really, really easy for people to sell and buy. So that's an enabling technology for just the consumer behavior part.
Can you describe your exit strategy and how you approach your investment exits?
For the material science side, it's likely that these will be acquired by large chemicals companies who have been talking to these founders since the early days. It could be large chemicals companies or like specialty chemicals companies. We have a couple in the TPU space, a polyurethane space. We just invested in an amazing company created in the polyurethane space. I'm really excited about, called Material. And so those would be likely specialty chemicals companies. They're huge. There's some on the material side. So some of the suppliers within the material supply chain are these enormous companies that are competing with having these more kind of sustainable portfolios as well. And so they've been circling. Some of them have been co-investors. There's a couple big conglomerates out of Asia that have co-invested and are looking very closely at this space. So that's more on the material science side, is like that's the likely path. And then on the software side, it really depends on the technology. There's a number of them that are on the supply chain side that I think there's these huge like retail B2B SaaS companies that provide PLM services, all these tools that apparel brands require, that do actively make acquisitions that I think could be a target for a couple of the companies there. There's also some larger, there's like optimized search. So there's some larger like Amazon, Google, like that style of company that would be interested in some of the technology and the information, the technology side of our portfolio captures. So it really depends, but we look at a lot of those early acquisition targets. It's not apparel brands. Everyone thinks apparel brands are the ones that would be acquiring them. They do not want to own their material.
You are an impact VC investor. You are investing in businesses at very early stages, and you're investing in the potential of the business and the founding teams. So how do you ensure that you're investing in businesses whose impact can be preserved long after you've exited, when so much of the potential impact is unknown and comes somewhere out there in the future?
Sure. It's a good question. And there are notoriously these amazing companies where once they became public or had the wrong investors on board, they lost their impact. And so, that's something we think about. And it goes back to due diligence and the embedded impact strategy. And like, is it possible for it with different leadership, whether at the board level or at the CEO level, to lose their impact? And so we look for that risk. We actually have these categories of impact risk that we use. And then we think about the co-investors. We bring on great syndicates of co-investors. We have a lot of great groups around us that come in with us, but then also come in later stage. We act as deal flow pipeline for those larger later stage funds that are led by really great climate investors that we know. So we do that a lot. We go to work for our portfolio companies when it comes to fundraising. Because of our nuanced approach and our diligence strategy, we can help expedite the conversations for them. So we do that pretty actively and just make sure that there's, some great groups to pass the baton to when it's our turn to leave.
A brief glance at your website shows that there's a lot of girl power in your shop, but Alante seems to have the reputation for working primarily with female founders. First of all, is that true? Is that a specific goal for you? Or did that just happen kind of as a recognition that women founders are an overlooked opportunity in the marketplace, similar to Sharon Bosmick at Astia? She claims that's like a huge opportunity for increased return out there.
So no, we do not actively only invest in women. We are a bunch of women that work here. So, and not exclusively, the one external person on our investment committee is a man, but there was another woman that was working with us last year. Part of that was my network and the people around me who I worked well with. And I really love giving opportunity for people who should have it and haven't had it previously. So I think that's kind of why I was also attracted to bringing in certain people who I thought, man, you can do this job incredibly well. I don't care about that traditional background. And so that was me. So I liked that in others as well, for building our own team. So, and then when it comes to investing, what we did, it was a struggle for me, because when I started, even at Elios, it was like, well, you're a woman investor, so you should invest in women. And I was like, but that's not the strategy. That's like not why I'm here to invest. Like, yes, of course I'm going to invest in women. I don't see any reason why I wouldn't invest in women, but that's not the reason why I started a VC fund. So early on, there was all this pressure that should absolutely be a mandate. And so what we did is we went in and said, well, what do we want? And what do we believe? And I said, I believe that, a lot of women and people of color are going to make excellent founders. So let's commit to having at least 50% of our pipeline always have C-suite represented from underrepresented backgrounds. And if we do that, my theory is that it will result in a more inclusive portfolio. But we're not going to have a mandate on the portfolio side. I want to just invest in the best companies addressing systems change in the apparel industry. So that's what we did. And we had a clause in our PBM around that strategy that, we always make sure. And frankly, without trying, our pipeline is pretty much always hovering at 60% of people with founding teams of underrepresented backgrounds. So it's pretty amazing. It's interesting though, because we get a lot of deal flow from Europe. We also invest in Europe. And every time we do that, it starts to decrease our diversity metric. So I'm trying to figure that out. But the whole reason why we track that is because if we start to see that we're not having a more diverse, set of entrepreneurs in the pipeline, we need to be expanding our reach. We need to be partnering with more accelerators or universities, or making sure people know to be applying to our websites. But it doesn't stop there. We also think about, in the criteria of what makes us invest, how do we remove traditional barriers to receiving investment? That goes back to the certain schools or the certain jobs you had before. We're not looking for a certain type of a criteria. And then the results was, in our first fund, 11 out of 12 companies have founders from underrepresented backgrounds. It was very inclusive. We'll see where we go with fund two. I think it'll probably be something a little similar, or maybe a little bit less, because of our investments in Europe right now.
Eileen Fisher is one of your founding partners, and Alante emphasizes the importance of partnerships with bigger brands in the apparel space. How does the accelerator effect work in this industry and practice?
So Eileen, she came in as an individual investor in Fund One. She helped seed the company so that we could launch the fund and do all of that, which was amazing. And then we also partnered with her brand. Her name really was this kind of seal of approval that we did something meaningful for sustainability in the apparel industry. She's very well respected across that industry. So it really helped us in 2018, 2019, launch our partnerships with other brands. So when we went to Levi's, they were our first outside brand, and I wanted to work with them so bad. Their chief sustainability officer, Michael Kabori, had inspired my whole approach with Alante. And I had quotes from him all over my first deck. And then they became the very first partner we had. It was really cool to have them on board, but they saw Eileen's name and were like, yeah, sure, we can meet. And he gave us a chance. And then we had Levi's name, And so then we got introduced to the Gap, and the Gap was like, well, if you're talking to Levi's, I want to talk to you because, So I would leave the Levi's Plaza, walk down the street in San Francisco and go over to the Gap headquarters. And then, there in the Bay Area, they said, oh, I have a friend over at the North Face. And I met the North Face and started working with them. And then I would get opportunities to speak. And I would speak at these industry conferences, the Outdoor Industry Association. And I would just talk about strategy and just get all of these brand partners instantly coming up saying, oh, we want to work together. And so that's how we really built out the network. And what I'm excited about for the network now, we have a lot of brands. We even launched a consultancy years ago now, supporting them more with a separate team. And now we're starting to have more suppliers and manufacturers, these huge companies from the supply chain that we get to now talk to regularly in Singapore and Indonesia and India, who are actively looking at sustainability in their operations. So it's exciting to see kind of the level of interest across the space now and the willingness to participate in partnership.
And you believe it's resulting in significant change, or will result in practice and significant change?
Absolutely. I mean, it's almost impossible for a brand to not care about sustainability at this point in the fashion industry. It's just like mainstreamed. But what hasn't mainstreamed is the availability of materials and alternatives. Those are all still commercializing and it takes time. So, having invested in this space, I know kind of how far things are off to market. And there's going to be, in about 2 years, so much of this new innovative material fully commercialized and ready to be scaled. And we're just going to start to see it in every collection. So I'm excited about the interest. It's maturing too. There's been a lot of call outs for greenwashing. Brands are not doing it right. They're making claims. And when I see that across different industries, that's a signal that it's starting to mainstream and starting to mature. And now there's going to be reporting requirements. We're going to have to do this better and authentic. And that's happened. And it's super exciting.
More environmentally or socially sustainable fashion normally comes with a higher price tag. How do you manage this in the world of fast fashion where there's so much pressure on pricing?
We also look at inclusive aspects of where the product's going. So I don't want to support things that are like only for the luxury sector. We're looking at things that can like service the broader industry. And sustainable fashion can be more expensive. It's not always now. You can get a lot of really affordable stuff made from like what is available on preferred fibers at Target these days. I mean, it's just more available, but not necessarily in the style you would want or all of that. And so sustainable fashion still tends, if you want like everything that you'd want, to be more expensive. For me, what success looks like is that somebody walks into a mall in the middle of the United States and goes into Old Navy and buys something and doesn't even know or care necessarily. Hopefully they care, but like what it's made out of. And it's just made with responsible materials. It's just made because we've created a systemic change. So it's not this like small collection or this small group of brands that are offering a better way of doing business. It's just the way business is done. So that's the vision that we see and the direction that we want this industry to go in. And that's the frame that we look for when we're investing in technologies that can help get them there.
Where do you see the most promise in terms of tech-based circularity solutions for apparel looking out moving forward?
Man, there's a lot of promise all over the place. But there's because dropping chemicals side that I'm really excited about that are starting to utilize more waste as a feedstock in a smarter way where it's not requiring like conventional corn or sugar to make a biopolymer or something, but is able to like create these clean and massively scalable alternatives to very widely used chemicals that we all rely on and get to a point of economies of scale that it can be competitive on price. Like there's this company called Material I was briefly mentioning, and they make a bio-based with air carbon and another bio-based feedstock polyurethane alternative without isocyanate. And that chemical, that chemistry, and producing that chemistry is incredibly toxic and dangerous to produce. And a lot of alternatives making a bio-based polyurethane either use conventional bio-based material that is got a bad carbon footprint. And they use a lot of fertilizer and water, whatever, or they use isocyanate, and isocyanate chemistry is still incredibly toxic and dangerous, but they've managed to fix both sides. And the way that they create their polymers, it can be either recycled or biodegradable at the end of life. So they can kind of tune that to whatever their customer needs. And this goes to market with adhesives, coatings. I mean, polyurethane is everywhere. It's in every part of your shoes. It can become in the foam. It's an elastomer for stretch. It's TPU at the bottom of your shoes. It's, like this is PU. It's just really everywhere. And so the market is huge, and their innovation is a really exciting unlock that can compete on all of the aspects that matter, from environmental to price and quality and scalability. And I'm just starting to see more of that. And that is very exciting. We're like kind of in this 3.0 of alternative materials, and AI is helping. Oh, I had to say that. Okay, but it's been like 2 hours and I hadn't mentioned it. So, but AI has been helping move the testing forward in the material science space so that they can more quickly find the feedstocks or the outputs that matter. So there's just this kind of revolution happening right now that's pretty exciting.
Well, Karla, you've been very generous with your time, and I think we've made it to the finish line, at least with my questions. But I've really enjoyed it. It was really insightful for me. So thank you very much for taking me through all this. I've learned a lot. Now tell everyone about your websites and your social media and all that good stuff.
Awesome. Well, thank you, Scott. It's been a pleasure. Really enjoyed chatting with you. Yeah, you can find us at www.alantecapital.com, ALANTE capital.com, or on LinkedIn. I think we are sadly not really participating on Instagram or Twitter or anything else, but LinkedIn is a great place to follow us.
What's the best way for people to contact you?
Yeah, on LinkedIn is also probably the best way to contact me. You can contact me directly on there, or you can go onto the website and go through the info and we get that. I get that. So I will be able to reply and get in touch.
All right. Well, Karla, thanks again.
Thank you, Scott.
All right. Goodbye, everybody.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.